For more, I'm joined by Gavin Hattersley. He's Molson Coors Beverage Company CEO. Gavin, it's great to see you again.
Thanks for having me, Kelly.
I know I should probably get a comment on you about the quarter, but I'm really more interested in what you see coming down the pike this year. What's happening with price pressures? Are you going to be able to raise top line enough to offset that? What do you anticipate?
Well, Kelly, thanks for having me on. Look, 2022, we also have a first. We've issued guidance that we're going to grow both the top line and the bottom line, which will be the first time we've done that in quite some time. And certainly we are experiencing input cost inflation. But at the same time, our business is as fundamentally sound as it's been since before the revitalization plan. Our brand portfolio is in very good shape. Coors Light, our core brands, both grew top line last year. And we are very excited about how those brands are positioned at the moment. Our move into the emerging growth space is ahead of our plan. We put a goal out there to get to $1 billion by the end of 2023, and we're actually ahead of that plan. And then above premium with Seltzers and Blue Moon have been particularly strong as well. So that will certainly help our mix profile. So not only will we get frontline pricing, but we'll have strong mix. And the cost savings program we put in place many years ago will also go some way to offsetting the inflationary pressures that we're expecting.
Is beer back, or just are your beers back? Let me quote from MKM, which has a buy rating on your stock. They say Miller and Coors are outperforming Bud Light. 10th and Blank, which I'm not even familiar with, is outperforming craft beers. And then the innovation you mentioned, like Blue Moon Sky.
That's correct. Yes, we are outperforming from a premium light point of view, and we have been outperforming Bud Light for, years and years and years, and it is actually accelerating. 10th and Black is our craft company. It houses all our craft breweries. Leinenkugel's is our biggest one there, and Summer Shandy is already starting to take off in some of the southern parts of the country. It's not summer where I am, but down south it's taking off quite nicely. So yes, our portfolio is fundamentally very sound at the moment.
So tell me about inflation. How difficult an environment is this as a CEO? While you do have some tailwinds working in your favor, have you ever seen anything like this, having to pivot from supply chain sourcing problems now to the price pressures you're probably experiencing?
Well, it's certainly the toughest it's been for a while. I did live through some of the high commodity prices in the early 2000s, particularly aluminum. So it's not a world I'm unused to. We have spent the last 2 years making sure that we do everything that we can to make our supply chain as robust as it can be, and we've increased our inventories heading into this year by a substantial amount. So we're not expecting any out of stocks. From a cost inflation point of view, we put in place a robust hedging program many years ago, and that's designed to take some of the volatility out of pricing, and we're going to reap the benefits of that in 2022.
Wow, so you do have hedging, which is helping you right now. I guess my final question is, how much more are we going to be paying for Miller and Coors and your products this year?
Well, certainly our price increases are lower than the headline inflation that you've seen, quite a bit lower, actually. And it does vary by brand and by pack and by market, Kelly. But yes, we will be taking some price this year.
Couple percentage points, or are we talking kind of 5 to 10%?
No. We're talking the 3 to 5% range.
All right. Well, I will keep my eyes out for that. Gavin Hattersley, thanks for your time today. It's great to have you.